We're joined now by Samir Arora, founder and fund manager at Helios Capital. We always look forward to these conversations with Samir. He speaks his mind and has the best commentary ever on what's happening in the markets. Plus, I love your glasses this morning, Samir. It's matching your jacket. So, okay, let's start with the kind of appetite we've seen for State Bank of India. The reason I'm starting the conversation with that is because if you just look at fund flows, and we tend to look at fund flow data, foreign flow data, it's quite dismal. But when there is paper of value, clearly the appetite is very much there. Is that the problem? Not enough value being spotted right now in the Indian markets?
No. It is, of course, the fact that this is a big size issue and the stock is relatively cheap. By the way, we own it since June 20. And so that could be one reason. But I think the overall market flow dynamics have already changed. Because since April, May, when people have got, even though the US market is doing well, the world seems to have come to a conclusion that they have to diversify away from US a little bit. According to the MSCI benchmarks, broadly 68-70% of the world's money goes to US. And that is no longer accepted as much by the world. A, because the rest of the world is outperforming US this year. The currency, that is the dollar, has depreciated by nearly 9.5-10% against the DXY. And in general, people feel that that is too much, the fact that you have 70% in the US, which in the past, that means say 10-15 years ago, would have been in the 50% range. Since then, the US market outperformed a lot and sucked in so much money from the rest of the world. I read recently and actually invested in that same ETF, which is the World ex-US ETF, saying that the World ex-US ETF is raising billions of dollars, which previously they were not getting. The ETF had been around for long. So there is this little bit of moving away from US. And if that happens and continues, then because US is 70 and the rest of the world is 30 or 68 or whatever, and you reduce 3-4% from US, we mean all collectively, and that 3-4% goes to the 30% base, everybody gets more money. And in that, India has a strong case. So India money, I think the overhang of selling has already gone away 1 or 2 months ago, according to me. Long story. That is a short story. That you will get more of these. Of course, SBI itself was attractive because it looks visually cheap, and it is cheap, and it is big, and it's easier for people to put 500 million. But if you give them $350 million deals, they will also get subscribed now, I think, because the direction has changed.
The direction has changed. So, I'm wondering whether you are waiting with bated breath to see the India-US trade deal or not. It's sometimes anticipation becomes so long, it kills the buzz.
That's why it's gone. Now, basically, you can see from the hints, according to me, it'll be between 15 and 20%.
Yeah.
So it won't be the 10 that we initially thought, but we will all view it as positive by looking at relatively what has happened to other countries, including China. So China is at 35 new, plus it had the old 20%. Let's ignore that. Okay, it's been there from previous Trump regime. So the new one for China is currently 10 plus 25 for fentanyl. So that is one competitor. Second, we can say for textiles is that Bangladesh, more than Sri Lanka, more than Vietnam, 20. So if you are in the 15-20% range, you can say we are not, we have got some advantage over some of the guys, but I don't think we're getting to 10 the way this conversation and the comments seem to be coming. But I'm saying beyond that, beyond a point, what will we get excited about, except to say that relatively this advantage is there for some of our exports like textiles and here and there.
Samir, good morning. Hira this side. So would it be right to say that the interest with regards to US is now shifting away? And if so, do you see that coming back to India in a strong fashion by the FIs?
No. First of all, it is not shifting away because that is too big a statement because all the progress is done there even now. But what I'm saying is this 70% looks a bit too much. Now, you could have said that last year at 68% or whatever it was last year. But then at some point, the world realizes, A, because maybe they are upset with US. Maybe the sovereign funds are upset. Maybe some large guys are upset. Individuals may be upset. Their companies might be upset. So you say, why do I put so much? And also, it looks beyond a point unsustainable. But even if you think that It was not, but just the fact that the rest of the world this year, that means MSCI World has outperformed S&P. So that also then makes people who were always believing that this US exceptionalism is good, but it does not mean taking 70% of the world's money with 25% GDP. So I'm saying we don't know how far it can be, but it is clear. Even in our own portfolio, we have a global fund where we used to have 72, 73% in US up to January this year. And now it is at 50%. Now we are aggressive guys, but some institutions won't go from 70 to 50, but they can go from 70 to 68, 67. That is massive money for the 30% crowd. That is the balance. And in that, India has a very strong case. That case is our fiscal deficit is in good shape, our inflation is good, the RBI and SEBI are trying to be more market friendly, regulations reduction. We have a good monsoon. Then you can add a few more things. We can say we are
So,
beneficiaries
so,
of
so
this
Samir,
trade
Samir,
deal.
I'll
So
interrupt
many of
over
these
here.
things.
I'll
That is the
interrupt.
story.
Yeah.
It's not
So
a massive move,
it's not a
but
massive move. So if the global fund has reduced exposure to the US from 70 to 50%,
no,
where does correct, Helios Global Fund, correct. So then how much have you increased, if you have, in terms of India, and where have you increased?
No, in that fund, we won't increase in India. We have India dedicated funds. That fund has gone basically 15% into China, which used to be 4-5%, and 5% into gold. And India used to be 9%. Now maybe it's become 10-11% just by a little bit of relative performance in the last few months. But basically, that money has gone into China plus gold for now.
And in India,
And
where are
that
you
fund is not
increasing?
intended to be an India centered fund, So the India weightage in the index might be 1 or 2%, and against that it is say 10%. So that will not be increased in that fund. But otherwise, our India funds are doing well. Our mutual funds are nearly now reached 5,000 crores, which started at 500 crores in November 23. So in 1 year and whatever, 7-8 months, it has become 10x the AUM. So that way, India we can see is on the cutting edge. I was saying in a big picture sense, people who were too much into US moving away from US. For us, the thing is because we have separately so many India-centric funds, global fund. I mean, global means foreigners investing into India. We are not making our global fund be basically an India plus fund. So it will have only 9-10% in it.
Just on a little bit of a separate note, Samir, I was going through your X feed, which I find most entertaining, and I have to ask you about this that you put up, where you say, analyst, we had a buy on the stock, we continue to recommend a buy. We actually made a graphic, let's pull that up. So client says, but how were the results? Analyst in the voice of Salman Khan, एक बार कमिटमेंट कर दी तो मैं अपनी भी नहीं सुनता. I can't do the Salman Khan voice, but he says buy remains a buy. This I think is an important point to talk about and address, Samir.
I aimed it at the IT sector,
Yeah.
where companies have had pathetic results, broadly no guidance. And everybody say, no, we have a buy because next year there will be a 1% gain in something or a 0.5% gain in something. There's no logic. If you start from a zero base, then any of these guys would have put a buy. But because they had a buy, now they say, okay, let it continue, kind of thing.
No, but it's an important point to note. We did a piece recently about how a majority of buy ratings have not translated to anything over a year.
In terms of returns.
In terms of returns.
No, but that is okay. But go beyond that. That if you have two bad results, you reduce your EPS guidance. You reduce your own EPS estimate by 5-6%, and then you say doesn't matter. Buy still continues. So in Alliance, when I was there as an analyst in the 90s, the rule was that if you cut guidance, if you cut your estimate by some X%, 4-5%, you have to change this thing. You can't say it doesn't matter. It's 5% less. How does it matter? Because we are long-term guys. That was the rule for being sort of not active, but to be whatever is the word. That you can't just generally let the buy be separate and the analysis be separate.
Okay.
You
No,
can't
so
let it be stale.
no. So
The
coming back to IT,
recommendation.
coming back to IT, because that's an important one. No one can quite make up their mind. There is enough commentary which shows some positivity on IT and Indian IT, but the numbers are just not matching up.
No. I'm saying you look at those numbers and you make them positive. You take these guys' positive number and then say what is the valuation, what is the growth. Okay, instead of going 3 to 4, I will go 4.5. Now that is positive as per the market for 2 days. That because you have outperformed. But the point is at 4.5, why should you? How much will you give? Okay, make it 7%. Make it double of what the estimate is. What should be the PE for that? I mean, look at the Google P there. It might be 16. You do it SOTP, it might be 10. And here we are saying doesn't matter, 25p is good because lever is 50.
No, so
It's
how are
too
you
much.
looking at IT right now, Samir?
So we don't look at it much. We
Yeah?
don't look at it broadly.
Completely underweight IT with all the
We
numbers
have
coming.
only, I mean, it depends on what you like. We have one stock, which is KPIT, which we also have kept. Although that also hasn't done much in the last year or so. Yeah, otherwise we don't have. Unless you call indigene IT, okay, we have it. Depends on classification, but yeah, nothing else. Nothing.
So ER&D is something that you're liking.
No, it's not like even that. That is a big concept. Look at the results of these other companies and how they have done. So you can call it one company now, whatever category you want to call it. Because my general big picture thesis was, we don't like generally auto, we don't like a disruption by EV. But here he's assisting the disruption. Assisting the disruption is okay. Being disrupted is not okay. And basically, IT sector itself has been disrupted. What to say? IT sector itself is disrupted right now. People don't want to believe it's been disrupted black and white. You can see it in every result, every company.
What about the new age tech companies? Swiggy, Zomato, would you still look at them from a positive view?
Absolutely. But before that, they are not really tech companies. Tech company would mean that, they are basically, because what people don't understand is how difficult it is to, in real life, have 300,000 restaurants and 300,000 agents, and every minute they have to be busy, and every guy has to be delivered what was ordered, and there should be less complaint or zero complaint. Everybody should get it in 25 minutes and then go to the next guy and in Blinkit deliver everything in 10 minutes. It's a massive exercise. And so people think of it, oh, he's just delivering food to you, but that is not the way. It is an extremely complicated business. And we like Eternal more just because we have it in a bigger position. And by the way, we have just made 5x as of last week because we bought at 52. But the point there is, there are very few pockets in India where you don't have to rely so much on the end growth of the industry. You are relying on the change in buying habit. And at a very small percentage move, it has reached like maybe combined this whole industry might be a $10 billion value, and whereas the market might be 500 billion or something for grocery and retail and all these things. So it's a very small shift, but you are still not depending on some unknown random this thing that the growth will be 8% and you will get new orders from somebody or something. It's a day-to-day business with the convenience being highlighted again and again because of too much difficulty in dealing with India every day in terms of traffic and pollution and weather and heat. And on the other hand, for whatever reason, very comparatively available labor. Now, if the world doesn't want it like that, there's nothing we can do, but that is a model perfect for India.
When you're seeing the results so far, and I know it's early days, it's barely a week, there's a lot of commentary on optimism with Q1. Q1 can have a positive surprise. Are you buying into that at all? Have you made up your
No, I
mind?
thought you said it well that the results have been very weak
For
this
IT?
week.
For the
No.
week this week, okay.
But I'm saying in general, I don't think that you can have. See, so we are bullish, but you have to understand what does bullishness mean in today's context. Bullishness is that India is better than most of the other countries or many of the other countries in terms of fundamentals and macroeconomics and policy sentiment or change, whatever you want to call it, on the margin. Plus, this flow based thing is there. But since the results can't be very good, because in two and a half sectors, which are big sectors, the growth rate will be very low, which is IT, big consumer, and even although we own most of these big banks, they are not going to grow even 10%, I think. Maybe 8, 10% they will grow because of NIM compression, this, that for 1 or 2 quarters. So the aggregate earning, plus you've seen IT is actually negative. Today you saw that broking fellow minus 65. There'll be many of these. So in aggregate, the numbers can't surprise positively, but we can say going forward consumer will move up to 3% and IT might bottom out, and therefore your earnings growth may be 12, 13% instead of 9, 10%. And therefore we say with all these positives you are supposed to make 10, 12% for
So,
now
so,
in a year.
so 10, 12%, Samir, this year. And with that, you've been positive with regards to insurance as a space as well.
Yeah.
You have HDFC Life, ICICI Lombard, all of them that have reported numbers in the last 2 trading sessions. Do you think numbers warrant a buy at current levels?
So first thing is you don't know what I like because those funds I don't manage. I
Okay.
manage offshore funds, but broadly we all like, and I know what you're talking about, the mutual fund side. By the way, there's a third one we own, which is the health insurance. So yeah, broadly we like the theme, and the fact is right now there is a shortage of reasonable to high growth ideas in our market, and therefore any place which offers that is exciting because you can't have the whole portfolio growing just because like this IT or these consumer large companies or the guidance was 4% and they came out with 4.2%, therefore it's a buy. Those things we don't like. So we should at least start with the feeling that the revenue earnings will grow in the range of 12, 15% or more, and anything which offers that with somewhat big picture support and backdrop and somewhat reasonable valuations will be a candidate considered
Pharma,
seriously.
very quickly, Samir, my producer is telling me I have to thank you, but I'm just going to squeeze this one in. What about Pharma? Because Pharma, with
No, you
what
can thank
Glenmark
me
has done.
afterward and before. Nothing wrong. Thank you should be done anyway. He doesn't have to tell you. You should
No,
stand on your own.
I
He
have
doesn't
to
have
take
to
a
tell you
break,
that.
that's why. So I'm going overtime. There's a whole different metric here. No,
Arey,
but
now you are a
what
big
about
company. You don't need all these ad breaks. Tell me.
what about Pharma stocks?
Pharma we like. Pharma we might buy more also. And we like healthcare also. So yeah, that broadly. But the thing is, those weightages, because the way we have done it in the past, these won't define our life, but they will be helpful. That means we are not going to make 15% pharma, but you can have 5, 6% pharma. So you can say matters or it doesn't matter. But yeah, we like pharma and we like healthcare and we like this Fortis and we like Apollo and we like here and there pharma also. Yes.
Superb, superb. Thank you, Samir. Always a pleasure,
Thank
always
you.
fun to have these conversations with you. Have a great day.